This is chapter 2, buyback of shares of the question bank. Question number 1. Following is the financial position of Zee Limited as on 31st March 2017. Liabilities and assets. This is the balance sheet. Equity share capital of face value 20, rupees 15 lakhs, 9% of preference share capital, rupees 5 lakhs, securities premium, rupees 55,000, profit and loss account, rupees 75,000, capital reserve, rupees 35,000, dividend equalization fund, 64,000, general reserve, 35,000, capital redemption reserve, 40,000, worksman compensation fund, rupees 1,60,000, secured debentures, 3,90,000, current liabilities, 46,000. The total comes to 29 lakhs. Asset sides. Fixed assets 16,45,000. Investments. Market value is 1,60,000. The total is 1,65,000. Stock 2,50,000. Debtors 3,52,000. Bills receivable 45,000. Bank 4,43,000. The total comes to 29 lakhs. Sorry. The company passed a special resolution. The company passed a special resolution for buyback of its 15,000 equity share at price of rupees 28, for which following arrangements were made. Entire investments were sold at its market value. B. Fresh issue of 800 11% preference share of face value 100 is to be made at the rate of 10% premium price of rupees 110. Assuming buyback was successfully carried out, pass out journal entries and prepare balance sheet. So as we read out the question, now we'll start with the solution. This is the format of our journal entry. We'll write a first entry here. So first entry would be based on this arrangement here. Can you see? Wait a minute. This one. Entire investment was sold at its market value. This one. So we'll write here first. Bank account debit is rupees 1,60,000. See, as the entire investments were sold at its market value, as the adjustment says, so the market value of the investments was 1,60,000 and the total investments was 1,65,000. So we have to make the total. Okay, like how we'll make it, we have to make 1,65,000. So we'll write here profit and loss account. See, what is the our value for profit and loss account is 75,000. So it is much more capable and we can take some amount from it. So we'll take 5,000 from a profit and loss and we'll transfer it to investment account. The total comes to 1,65,000. See, I'll write the narration. Being entire investments sold at its market value. Okay, now we'll continue with the second one. So the second entry would come as the second adjustment. See here, you can see this. Fresh issue of 800 11% preference share of face value 100 is to be made at 10% premium. The price of it is 110. So what we'll do is we'll write here bank account, and here is a little we have to do a calculation of, we have 800 preference shares and the premium price is 110. Okay, so we'll take it, it's debit, so the total will come as 88,000. Okay, now we'll write to, it is 11% preference shares, right? So we'll write to 11% preference shares, share capital. Now again we have to do some working here. It is 800 preference shares and the face value was 100. 800 into 100 comes as 80,000. Okay, now again we'll write here 2 securities premium account. No debit account. Here we have some working. 800 preference shares and the premium price was 10% premium. Okay, so we'll write it will come as 8,000. Okay, account here, account will come. Now we'll just write the narration. The narration is same as the adjustment. It is the same as the question, being fresh value of 800 preference share capital shares of face value 100 at 10% premium. Okay, now we'll write a third entry. The third entry is based on this little paragraph here. This statement: the company passed a special resolution for buyback of its 15,000 equity share at the price of rupees 28. Okay, so now we'll calculate here. First we'll write equity share capital account. Okay, now again we have to do a little working here. First we'll write 15,000 shares and the original face value. The original face value was given as rupees 20. See here. Okay, here can you all see it? Rupees 20. So it will come as 3 lakhs. Okay, now we'll write premium on buyback. So we have a little premium on buyback of 8 rupees. I'll explain it how 8 rupees come. Okay, we have 15,000 equity shares of a buyback and rupees 8. Debit to 1,20,000. So we have the original face value of rupees 20 and here the equity share of buyback was rupees 28. So we have only 8% rupees 8 profit. Okay, only 8 rupees profit we have gained on our buyback. So we'll take 8. So we'll take here 8 rupees 8. Okay, like that. To equity shareholder account. Okay, again we have to do a little working. It is like 15,000 equity shares and the full price, it's like 28 rupees 28, right? So we'll get 4,20,000. I'll write the narration and explain it once again. Being special resolution passed for buyback of 15,000 equity shares of, okay, 15,000 buyback of 15,000 equity shares at the rate of rupees 28, and amount due to equity shareholder. So see, what did the statement said? It was like equity share. The company passed a special resolution. The company passed a special resolution for 15,000 equity share at the price of rupees 28. Okay, so first we'll calculate equity share capital. It was 15,000 equity shares. Okay, at original face value. The original face value was rupees 20. We'll get 3 lakhs. Then we have to calculate the premium. What is the premium? Rupees 8. Okay, the face value was 20, and we have we are getting the premium of rupees 8. The total comes at 20. So first we'll calculate 15,000 into rupees 8 as the premium, comes to 1,20,000. Then the amount we have to pay, the full amount to the equity shareholders. Okay, we have to pay the whole amount to the equity shareholders. So we are transferring it to, so we are saying here to equity shareholder account 15,000 with the premium on buyback, like the price of buyback 28 is 4,20,000. Now the fourth entry is correlated with the third entry. I'll show how. So I'll write here 4 is equity shareholder account debit. The amount was 4,20,000, right? Now here we'll write to bank account 4,20,000. I'll write the narration being amount paid to equity shareholder. Okay, we got a fourth entry. Now we'll write a fifth entry. The fourth entry is very simple. Okay, the fifth entry is a little bit complicated, but not too much. We'll write fifth entry. So the fifth entry is also correlated with the third entry. It is related with the premium, securities premium. Okay, like the third and the second entry. I'll show how. First I'll write securities premium account. Because we have to write the securities premium off, so I'm writing a securities premium account. We have 55,000 already. It's given in a balance sheet, and now we have 800 preference shares. The new preference share, it is a fresh issue. So the total comes as 63,000, right? Now we'll write P&L account balancing figure, and I'm leaving this as it is. Okay, I'll tell you why. Now next I'll write to premium on buyback account. Okay, so the premium on buyback account was 1,20,000, right? So I'll write here 1,20,000, and what I'm gonna do is I'll calculate this. Okay, so we have got 1,20,000 as the premium, and the securities premium total was 63,000. So I'll less 63,000 from 1,20,000. I'll get 57,000. So here the balancing amount was 57,000. It's simple, right? I write here the narration being premium on buyback written off. Okay, here. Now for the sixth and the last entry, we have to do some calculations. We have to make a working note first. Okay, so I'll write here working note. I don't think you guys can see this. More visible, right? Working note. Okay, we have to make a CRR, that is capital redemption reserve. So I'll write here calculation of capital redemption reserve. Okay, so first, for making CRR, there are only some accounts we have to take it into consideration. We can't take like, I'll tell you which accounts are there. So we can take equity share capital. Okay, yeah, we have to take the equity share capital, okay, which is the new one, the special resolution one. Okay, now then we have to minus the fresh issue, we have to less it, like we have to create it from that. Then we can take securities premium, P&L. We can't take capital reserve. Okay, we can take dividend equalization fund, general reserve, capital redemption reserve. We can't create a CRR or out of a CRR. Okay, we can take worksman compensation fund. These are the only ones we can take. So first I'll write, and you'll see it. Yes, face value. So yes, first we're going to take the face value of equity share capital bought back, okay, which was 3 lakh. You can even see you can, like, this is the third entry. Okay, so but yeah, I'm going to do a little calculation. I'll tell you, I'll explain. The 15,000 shares, which was bought back. Okay, the company passed a special resolution, and the face value, the original face value was rupees 20. It comes at 3 lakhs. Then we less proceeds from fresh issue. Okay, it was 80,000. Now 800 into 100. 800 was the fresh issue and 100 was the face value of the fresh issue. It comes at 80,000. Now we'll do the total. It was 2,20,000. I'll show. It's 3 lakh amount, and we less 80,000 from it. It comes as 2,20,000. Okay. Now we have created a capital redemption reserve. I'll write here capital redemption reserve. Okay, now we have to take these accounts which are set first. We have to take the amounts, and we have to take the accounts to make the CRR. Okay, the accounts which will create the new CRR, the new accounts, okay. Actually it's the amount which will be new, okay. It's not that. So how I'll do it, first we'll take securities premium. As I said, securities premium can be taken to create a CRR, okay. So we'll see if there's anything. So what's the amount of securities premium? So here, okay, this is the securities premium account. It is 8,000 and in the question is 55,000. So here is 55,000 and here is 8,000. We'll add it. 55,000 plus 8,000 comes as 63,000, okay. And here on the fifth entry, okay, can you all see this fifth entry, the 63,000 here? Yeah, and here is 63,000 in the securities premium account. So what I'll write is, so there's nothing left here because 55,000 plus 8,000 comes as 63,000, okay. And there was again 63,000. And why it is like, why is there nothing left? Because this amount is in credit side, okay. This amount is in the debit side, okay. And here this amount is in credit side. So we'll add 55 plus 8,000 comes as 63,000, but here 63,000 is in debit side. So we'll less it and we'll get nothing. It's nil. Okay. Next we'll take P&L or profit and loss. I'll write profit and loss account, and we'll see if there's anything left. So in the question we got 75,000. The amount of profit and loss was 75,000, okay. Then what we did, we took 5,000 from it, right? Here we took 5,000 from it, and this is in debit side, so we'll less it. 5,000 will less it, we'll minus it. Next we got 57,000, and this is also in debit side, so we'll less it again. 57,000, we'll less it again. So the amount will come as 13,000, okay. Amount is as 13,000. Next we'll take dividend equalization fund. Dividend equalization fund, okay. It'll come as, we'll take the whole amount as the question. It was 64,000. I'll show you all. It was 64,000. Next we'll take general reserve. We'll take the whole amount as 35,000. We won't take capital redemption reserve, there's here, but we won't take that reserve, okay, as CRR is not used. CRR is not created out of CRR, okay. We'll take then worksman compensation fund. It is 1,60,000. So we took dividend equalization fund. Down we are writing here general reserve. It was 35,000. Next is worksman compensation fund. Worksman compensation fund. It is 1,60,000, but we won't be needing 1,60,000. So what we'll do is, here we take 2,20,000, the new amount of CRR, okay. Now we'll minus all these amounts, like minus 13,000, then 64,000, then 35,000. We'll get 1,08,000. So that much amount will take from Workmen Compensation Fund. Okay, and when you'll add this 1,08,000 plus 35,000 plus 64,000 plus 13,000, see, we get 2,20,000 as the CRR. So we have created a CRR. We'll write here. Okay, we'll note a third entry here. I don't think you guys can see it. Okay. See, first the securities premium account was nil, so we won't take it. We'll write from profit and loss account. Profit and loss account debit. Amount was 13,000. Okay, can you all see this? Yes. Next, it was dividend equalization fund. Fund account debit. Amount was 64,000. Next was general reserve. General reserve account debit. It was 35,000, I guess. Yes, 35,000. Next was Workmen Compensation Fund. Compensation fund. It was 1,08,000. Yes. Now we'll write to capital redemption reserve 2,20,000 account. No, we won't write account. Okay, it's just reserve, so we'll write that much. We'll write the narration being CRR created from free reserve. Okay, now what we are going to do is, it's like, wait a minute, we'll write a small note. Okay, it is capital reserve and CRR and share forfeiture account cannot be used for creating CRR. Okay, after this we are going to do the balance sheet. This is the format of the balance sheet. Now at the end of the sum we have to calculate a new balance sheet. We have to make a new balance sheet with the new rates. It is in the vertical form. First we have to write liabilities and then we have to write assets. So we'll start with the liabilities. The question here. Okay, first we have the equity share capital, so we have to write the new rate of the equity share capital. So we write equity share capital, face value is 20. So in question we have 15 lakhs. The amount is 15 lakhs. Okay, and the new rate was 3 lakhs. Okay, So this is in the debit side and the 15 lakh was in liability side, which means the amount is written in the credit side. Okay, so now we'll minus it, 3 lakhs. We get the amount as 12 lakhs. Write the new amount here, 12 lakhs. Okay, next what do we have here is 9% preference share capital, but when it was a fresh issue here, it was a when the company passed a fresh issue, okay, it was 11% preference share capital. Okay, so we'll write here 11% preference share capital. Now the price was 5 lakhs. Okay, and the price was 5 lakhs. Here we have 80,000, so we'll add this 5 lakhs plus 80,000 comes as 5,80,000. So I'll write 5,80,000. Okay, next is this securities premium. As securities premium account is nil, so we won't take it into consideration, and and the same goes for P&L account. Okay, P&L account I'll show you, because P&L account we took the 13,000, the remaining 13,000 in for making the CRR, so there is nothing left. Okay, so we won't take or write that. Next we'll take capital reserve. We'll take the whole amount as here, it's 35,000. Next we have to write dividend equalization fund. So dividend equalization fund we took it for making the CRR, for creating a CRR, so there is nothing left, so we won't write this. And the same goes for general reserve. Now this CRR, okay, this CRR is of old one, so what we'll do is here we'll write capital redemption reserve, and we'll add this. So here it is 2,20,000, and there the old CRR was of 2,40,000, so we got 2,60,000. Okay, next is worksman compensation fund. So we took out 1,08,000 from 1,60,000, so I'm writing here worksman compensation fund. Worksman compensation fund. Okay, so it was of 1,60,000. We took out 1,08,000, so the remaining is 52,000, so we'll write 52,000 as it is. Next we have secured debentures and current liabilities, so we will write both of these as it is, like secured debentures, it's 60. Secured debentures, it is 3,90,000, and 7th is current liabilities. It is 46,000, I guess. Yes, 46,000. Next, first we'll complete our asset side, and then we'll write the total, then we'll tally it. So first we have your fixed assets. Okay, well guys can see it. Fixed assets amount is 16 lakh. Fixed assets, it is 16,45,000. Next we have investments. So as the adjustment said the entire investments were sold out, so we won't be taking it. Okay, next we'll write stock, debtors, bills, receivable. So second, third, fourth. The stock amount is like 2,50,000. Next is debtors. The amount comes as 3,52,000. Bills receivable. Okay, amount is 45,000. And last is bank. So the bank's amount was 4,43,000. So we have to do a little bit of calculation here. It was like 4,43,000. Then we'll add 1,60,000 because these amounts is at debit side and assets come at debit side. So we'll add the amount. If the amount is at credit side, so we'll less it. We'll minus the amounts. Same goes for liabilities. Liabilities amount are written on the credit side of the balance sheet, but in journal entries, if that amount is on the debit side, so we'll less it, and if it is on the credit side, so we'll add it. Okay, now bank's amount is here is like 1,60,000, and here we have 88,000, so we'll add both of these, 88,000. And last here, the fourth entry, you can see it. The fourth entry, yeah, it's like 4,20,000. So we'll less that amount, 4,20,000. And then we'll less 4,20,000. We'll get the amount as 2,71,000. So I'm writing it here, 2,71,000. So we'll add 12 lakhs plus 5,80,000 plus 35,000 plus 2,60,000 plus 52,000 plus 3,90,000 plus 46,000. So the answer comes as 25,63,000. Okay, the same answer will come here, 25,63,000. Okay, so I'm cross checking the asset side. The first amount was 16,45,000 plus 2,50,000. Then we'll add 3,52,000, then 45,000, and last 2,71,000. The amount will come as 25,63,000. So our balance sheet is tallied. Okay, the sum is over.